institutions are not going to be like heavily investing in these things, right? So it brings us back to that idea that, okay, well, they probably, if we get a spot ETF, they probably would start to heavily invest in Bitcoin, which goes with the whole dominance side of things as well. So I think that's just something that investors, they get so excited, and I don't blame them. I mean, that move on Ripple was incredible. Although, to be honest, I thought it would go more, maybe because it wasn't a full win and there's the appeal process. But for me, it's still this kind of pseudo gray now with maybe a little bit more clarity, but not enough to really release the Kraken, as they say,
The crypto world is gearing up for an immense rally, and in this video, we join Gareth Soloway, the president of Verified Investing, as he shares his analysis of the overall crypto market, Bitcoin dominance, and his stance on the US dollarization and its impact on the crypto and financial systems. In a recent announcement, the crypto exchange Binance has successfully integrated Bitcoin on the Lightning Network, a scaling solution. This move allows Binance users to make use of the Lightning Network for Bitcoin deposits and withdrawals. Alongside the traditional options like Bitcoin BP20, users now have the additional choice of Bitcoin Lightning and others. Binance joins other major players such as Kraken, OKX, Bitfinex, and River Financial in adopting this Layer 2 scaling solution. Binance initially expressed its intention to integrate the Lightning Network in May, triggered by the temporary suspension of Bitcoin withdrawals due to a surge in pending transactions and increased Bitcoin network gas fees. According to a recent report by Valkyrie Investments, the adoption of the Lightning Network is rapidly gaining momentum in emerging markets like South America and Africa, driven primarily by initiatives from the Lightning Network mobile payment application called Strike. Additionally, Lightning Labs, the company behind the Lightning Network, recently released a new toolkit that aids AI applications, such as OpenAI's ChatGPT, to interact with the Bitcoin network for sending, receiving, and holding the crypto asset.
Even though I believe that Bitcoin dominance was ultimately going to head higher, there was opportunities for kind of a snapback on some of the altcoins. And so for instance, I had members at Verified Investing Crypto. We were long Cardano with this beautiful little wedge. And then as it popped into this area, that's where we started to unload, right? So it's the swing trade ability to kind of just be in and be out and understand the bigger macro picture. But you can see what's happened. I mean, Cardano's come right back in. Now, interestingly enough, what this does for me, at least, is this potentially brings up a opportunity here. And I'm just looking for some chart things here. Like, so for me, this now becomes, let me do it again here. This becomes support right here, right? So you have this trend line and this trend line, which were this was former resistance. When resistance breaks, it now becomes support. And so for me, and this is again, strictly on a swing trade basis, I would potentially be interested in unloading or excuse me, buying Cardano again back at around 29 cents, give or take. And the same thing for Matic, right? I mean, these things were quick poppers. Now it's retracing. So now you have some opportunities on the way back down where you can play. But again, I think it's important to just caveat this for everyone watching that we're not talking, at least I'm not talking about long-term holds. These are make 10%, 15%, be out of the type of trading opportunities.
You don't know what the news is going to be that's going to associate itself with the price action, but it nevertheless usually comes.
And I do want to just point out too, is that just with Bitcoin dominance going up, again, just to reiterate, it doesn't necessarily guarantee Bitcoin's going to go up from here, right? So Bitcoin could drop 20%, alts could drop 40%, right? And then dominance still goes up in that situation. So just to be aware, and the only reason I bring this up too is if I just flip to my chart, is that there's been some, even though we're still technically stuck in a sideways consolidation, which is usually bullish for Bitcoin, I'm struggling with some factors here, right? So we keep on making these attempts and making even slightly higher highs, and then something's causing Bitcoin to kind of reverse super quickly. Like this candle right here technically fits a topping tail, and topping tail in technical analysis is a bearish indicator. Here we had this beautiful close. It was like the first close or the highest close we've seen. And the next day, Bitcoin fell right back down, negating that entire move up, which again is not confidence building. It's not a good signal for Bitcoin. And then we've just gone sideways. And you can see, actually, I put in a channel now. There's a pretty clear sideways upsloping channel that's kind of keeping price in this range. So I think just from my perspective is that you have to admit that this sideways chop after a move up is usually bullish. but it's not been an easy success breakout situation for Bitcoin. And I do wonder at some point, if this thing can't break out, path of least resistance is to the downside. And where's the big money, right? And the big money is not going to be, I mean, you got a spot ETF, which is going to draw, think about it like a magnet. The spot ETF basically has to be approved by the SEC, which is going to give semi-green light to Bitcoin for institutions. They're not getting that green light with altcoins at this point. Doesn't mean it won't happen in a few years, but as of now, it certainly does seem like that's the place to be. So I want to touch base on something that I've been looking at here, which is the US dollar, and get your views on this. So we've seen a pretty impressive breakdown just in the last week on the US dollar. And according to me, according to what I'm seeing, I do see some support coming in here, but everything I'm seeing is pointing to eventually further downside in the US dollar.
Several individuals, including Rich Dad Poor Dad author Robert Kiyosaki, S&P Global economist Paul Grunwald, and veteran trader Jim Rogers, have issued warnings about the potential end of US dollar dominance. A currency that many anticipate could replace the US dollar is the proposed BRICS currency, which might be backed by gold. Despite this, U.S. Treasury Secretary Janet Yellen does not view the proposed BRICS currency as a threat to the USD. In light of these developments, Gareth provides his analysis of the U.S. dollar's current state and shares his beliefs regarding the currency's future trajectory.
I'm looking at more for, the potential for the weakness in the US dollar that could drag on for years. And again, there's the difference between short-term versus long-term. But for me, it's like, you look at the US debt now, 32 trillion. And I think I was reading that 800 billion a year is just going to pay interest, right? And so the question becomes, how does the US get out of this? I was just looking at, there was actually a chart I was just looking at in tax payments. Tax revenue for the government is now falling off a cliff to the downside, which means it's even harder, which ultimately leads to, well, how do you pay it if your revenue's going down, your debt is going up, your interest payments are going up? There's not a lot of options. Either you raise taxes, which isn't going to fly with the government the way it is, or you print money, right? So that kind of breeds, and again, this is more of a 1 to 2 year outlook, maybe potentially not like the next 6 months. But I think that's kind of where I am, and you're right, if we get in a situation where China does invade Taiwan, the dollar is going to spike on that. It's still the safe haven for the globe. But barring those type of scenarios, you got to think at least that it could head down. It's kind of part of the bull case for me on gold as well. That it's going to be interesting to see. I mean, I'm super intrigued by the next 6 to 12 months in terms of what markets do. I mean, we're now looking at, and just to bring people up to speed on some of the things I've been following, the Chinese reported major economic data yesterday. It was all atrocious. And the thing is, when they report a miss, in general, I always like, so if they report like 5% GDP, I'm always like, okay, it was probably like 3%. They always like to overestimate, right? So the fact is they're reporting misses below expectations. It's probably even worse. And what's fascinating about the China situation is that we actually have a scenario where they came out of their lockdown and you did see a quick push, but it didn't last the same time. Like the US has lasted for so long versus China. It was like, 3-6 months max versus a couple of years for the US. So really interesting to kind of keep an eye on that. And I wanted to just show, I'm just going to go to my Hang Seng chart here, because I do think it's important to kind of recognize that, you've been in this period where this chart here, if we zoom out, you can go back all the way, but you topped out on the Hang Seng in 07, and then you double topped in 18. But if we look here, we're so far away from all-time highs in China. And again, you have to wonder, well, what's the kicker here? I mean, China is the fastest growing economy in the world, yet their stock market is in the dumps compared to the US, which if we flip over to the SPX, I mean, look at this longer term monthly chart on the S&P, right? Right. Look at the run we've seen. So again, is it their politics? Is it the communist side of things? I mean, I'm sure that all plays into money being wary about their tech crackdown and stuff like that. But again, it's just interesting to see. And then if China starts to weaken, does that signal weakness in the US or globally that we could be seeing? And again, you could look at the European Union. European Union's a mess. I mean, Germany to everywhere else. The US is kind of this one last domino that hasn't fallen. And I don't know if you have any views on the global economy and the domestic, but I'd be curious on that.
As the Bitcoin community awaits the upcoming fourth block reward having expected around April 24, 2024, speculation about its potential impact on the cryptocurrency's price is growing. An anonymous analyst has suggested that Bitcoin could surge to $40,000 or even $50,000 ahead of the halving. This surge follows the recent filing for a spot Bitcoin exchange-traded fund by BlackRock, the world's largest asset manager, which triggered similar filings from financial behemoths managing a combined $27 trillion, including Fidelity and Invesco. Plan B, known for developing the stock-to-flow model, offered a Bitcoin price prediction in the range of $40,000 to $50,000, utilizing the 200-week moving average as a tool to assess the future trend of Bitcoin's price. However, it's important to note that this analyst faced criticism last year when the model didn't remain accurate. Meanwhile, Robert Kiyosaki, the renowned author of Rich Dad Poor Dad, has made an even more bullish prediction, stating that Bitcoin could reach an astonishing $120,000, which is in line with Standard Chartered's forecast suggesting a price target of $50,000 for this year and $120,000 by the end of 2024. Standard Chartered revised its forecast with increased upside due to improved miner profitability leading to reduced net Bitcoin supply and a higher cryptocurrency price. With the upcoming halving on the horizon, the expectations for a new all-time high are on the rise. For more daily dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.